Okay, folks, welcome back. This is the ICT Mentorship Weekend Edition for November 23rd, 2019. Here's our dollar index daily chart by way of trading view. All right, so I want to first go over some things that I still feel are pertinent to what we're seeing right now in dollar. And last week, midweek Wednesday review, I was anticipating this area in here to provide, and this being Wednesday here, I wanted to see it roll over on Thursday and make an attempt to get down into the sell side liquidity. We did not get that, obviously. There was a large range day that was created on Friday. So that's one of the things that, from an algorithmic standpoint, what we were expecting in terms of market profile, weekly profile. My directional bias was not accurate, but I gave you some things on Wednesday's video that I want to talk about towards the end of the video, but I want to go over the salient points for right now. Take note also that I am not in the marketplace with my money. Okay, I'm not trading with live funds. I'm not putting anything in at risk. This is the time of year where the markets will absolutely be doing things that are more fickle. That means things will not pan out as frequently or as smoothly as I'd like to see them occur during other parts of the year, or certain times of the year, I should say. Even though we had a large range day on Friday, I don't trust it, to be honest with you. I really don't trust it. For those that have gotten this far in the mentorship to get the seasonal tendencies, I'm going to counsel you to look at the dollar index. Okay, now for the folks that haven't gotten that far yet, I will just basically outline verbally what I'm referring to. But you can actually see it graphically in the seasonal tendency when we cover those seasonal tendencies. Month 5, I believe it's when you'll see that information. But the dollar index typically will create a high during the month of November that generally will not be overcome during the month of December. We only have one more week for November. Here we are on Saturday, 23rd. So we have just this week for trading for November. And this is the holiday in the States, so I will not be doing any commentary at all outside of the Wednesday review and then Saturday. It may be a little later than 5 o'clock that weekend because this is a holiday week. Okay, so I won't be on Twitter. I won't be doing anything like that. I'll be spending time with my family. But the last week of November is upon us. And I'm of the opinion that these old highs back here, I have rules. Okay, I have rules. I have experience. I have just an inclination that all of this right here, this run here, was maybe just a rebalance to this small fair value gap. We went basically mean threshold of the last up close candle, which is a bearish order block. And we closed basically on the highs, really close to it. So we had the buy side liquidity pool. I mentioned before, I said I didn't feel confident that it would be required to run that before running down to sell side liquidity. I said that in Wednesday's video. And if you haven't watched Wednesday's video, it's probably better to stop this one, go back and pick it up around 7 minutes of the playback on Wednesday's video and to the end of it. It's not a long video, but there's 18 minutes or so are going to provide you a lot of the context for some of the things I'm going to talk about today. So these old highs back here, I really want to communicate this because I got a lot of questions as it relates to what I was implying, because I shaded the area here in the video I did last weekend, not Wednesday's video, but the weekend before, the one that has the black background for the charts. That's the video I'm referring to. I was highlighting basically this run here, and all of this price action above these equal highs. Okay. When we look for runs on liquidity, the market structure will dictate whether or not we go below equal lows and then reverse, or if we go below equal lows and break down further, creating an imbalance, then come back, rebalance, and look for lower prices. This is a daily chart, so it takes a lot of time and a lot of back and forth when we get these types of scenarios where we have equal highs. It runs, comes back in, runs again, comes back in, runs one more time, and comes back inside the range being from here and here. Okay, we created equal lows here, slightly lower low. I like that. And actually I mentioned, if I'm not mistaken, between the 7 and 9 minute mark of last Wednesday's video, generally, if we didn't have this high, and this high running and then failing, I would have used this as a fair value gap to be long here and expect the upside. Okay, so I'm not in here to try to make excuses. I was wrong, and you're going to be wrong too. So how do you deal with that? And a lot of questions come by way of email and Twitter. How do I basically stay mentally sound, where I don't feel like I'm losing, or that I'm losing control, or that the system or the method or the concepts or whatever is failing? The point is, this is just one period of 2 days. Okay, 2 days, Thursday and Friday. Now I gave you parameters that would constitute a point at which where the analysis is no longer valid, and you need to go back and watch Wednesday's videos for that, and I'll explain that when we get into the euro and pound very specifically. But the things that I was looking for did not pan out on Thursday, but we were anticipating the large range for the week to occur on Friday. Well, we see the large range on Friday on dollar. It just so happens that it went through the fair value gap that I was anticipating, offering resistance. I said initially on Wednesday in the review video, I said that if we have an unwillingness to go up into that shaded area, or this gap here, it should have very easily done that on Wednesday and or Thursday. But Thursday we had an up close after initially trading softer and making a lower low than the low that was formed on Tuesday and on Monday. So that was already a warning sign as it is. Now I just want to respond, because I don't know if this person really is in the mentorship, or if they're just, getting their friends and family, sharing their video with them or whatever. The comment was made to me on Twitter saying that, I'm going to paraphrase it and kind of like take from it what I got. You're telling us the bias change at the end of the weekend is of no importance, basically, and you should be telling us what's going to happen before it happens every single turn, throughout the week. And that's not what this is. I'm not a signal service. If I was running a signal service, you would be getting 6 signals a day, but I'm not doing that. Okay, so what you're learning is how to deal with these things. Okay, and we have a wonderful opportunity right now to go through that, and also kind of as we're getting closer and closer to the end of this year, I'm slowly working towards the algorithmic side of my thought process. So thinking like an algorithm, using the concepts, being who I am, 28 years next year in trading and market analysis experience, all those things don't equate to perfection. Okay, and the poster that I responded to on Twitter this morning, I meant sincerely that, their view seemed very myopic, in the sense that they expect perfect, like everything's going to pan out all the time, and it doesn't do that. I'm not infallible. I'm going to mess it up, and that's the benefit of knowing certain times of the year where I just simply sidestep and say, okay, I'll let everybody else play in this. I'm not going to do that. And in the lesson I'm going to give you at the end of the video, it'll help communicate that also. And I'm going to give you some homework as it relates to that. So I don't trust the fact that we had these multiple runs higher and hit a breakdown. All this run in here, think about how many times we've seen price runs that look extremely convincing on the very short term. And if you look at them weeks later, it's like, wow, everybody caught that move going long. It felt great, but then it turned on a dime and went lower, or vice versa. It could be the other way around where it drops extremely hard and then it runs the other direction. Seasonally speaking, okay, I think that this high here is the high for November, and this right here is just a return back into this consolidation without running the buy side liquidity, which is exactly what I mentioned on Wednesday. I still hold to that, even though that I was wrong on the run on the breakdown on Thursday and Friday. It didn't pan out, didn't happen. The things that I gave as a catalyst for nixing or negating that idea, okay, were very specific. Okay, I gave you specific criteria, specific things that I was looking for the British pound to trade like. All these things, I'm going to pull them together to give you a framework that was in my mind and proving that it was before the fact. Certain things that should happen if they didn't pan out, and these are my words, if they didn't pan out exactly how I was explaining, then I'm probably wrong and they're not going to be making an attempt to run for that sell side liquidity. Okay. And I also mentioned that I wasn't expecting that to happen for this week anyway. It could take a little bit longer. So I already know there's one guy in here, Mike. I know you're just chomping at the bit to be able to say something about all this because you're always looking for some kind of alternative view, to be, a nuisance really in my mind. But there's a measure of, I guess, objectivity that has to be taken when you listen to the videos. Okay, I'm not going to tell you every single time when the market moves where it's going to stop and turn on a dime. I'm not going to do that. Okay, I give a lot of details because I want you to spend time in price and watch and see if these things pan out. If they don't pan out, there's lessons in that. It doesn't mean that these concepts aren't strong, that no one knows what's going to happen. No one knows all the time what's going to happen. I'm at the top of that list. But there are certain times of the year where I'm extremely on. And we're getting into that area. And I've been warning this. I've been telling you that this is a very difficult market profile that I'm in presently right now with the dollar index. I'm leaning heavily on my experience and the tools in my analysis in this video, and just like I did on Wednesday. It just so happens it panned out. Now, obviously, you've seen that I've taken losses before. I've shared it openly. I don't have a problem with that. And if you try to hide from them, okay, or pretend they don't exist, or try to put blinders on, like, okay, I don't want to look at that. I was wrong about that. You're cheating yourself of the value that's hidden in that. So you have to go back in and look, and that's what I'm going to show you how to do this. The question I get, and the question you see on Twitter a lot, is how do you, as a student that's going through development, how do you weather those periods where you're wrong? Or if you have a series of expectations and your analysis doesn't pan out. If you're new, it's very easy to say, okay, I'm washing my hands of this. This is not good. This is fake. This is fraud. This is not going to pan out. It's all hindsight only. All those things start whirling in your mind, okay? The immediate response you should have is there is no emergency right now, okay? We're going towards the end of the year. You got to spend time going back and looking at old archives of commentaries and spend time with that. Because you're going to see that there isn't a lot of instances like we've had in the past week where everything is completely going the other direction. Okay, generally we expect certain things to happen and it usually pans out or it has to roll into the next week. If you expect that level of delivery and results and your expectations are that high every single week, every single day, every single calendar month, it's going to be a stumbling block for you in your development, because what will happen is your emphasis is not on graduating in modular steps to a greater expertise in understanding price action. You're translating all of the things you're learning in the time with me here to it has to be 100%, because if there's periods where it doesn't work or you do it wrong or I do it wrong, then your emphasis is placed so high and there's so much significance placed on that aspect, or your perception of it being that it is, well, it has to be that way. It has to be perfect or it's of no use. And I encountered that early on in my first quarter of my career. Okay, so if you divide my entire experience up into quarters, the first quarter of it was me being driven nuts by myself, because I would buy, and I bought and purchased and acquired over 2,000 books in my career. And the fallacy was that I was subscribing to is that the guy I was learning from initially, I would like what they would see shown in their books, or I would see in their books, and I would go in, I'd see it in hindsight, and it was like, yeah, this is great. I would 100% pour my belief into that teacher, okay, that author. And I did this with Larry Williams too, okay, and a lot of you do this with me as well. And you're going to outgrow me. It's normal, so don't resist it. It's going to happen, okay? That's how you graduate. You don't ever really graduate to mentorship until you no longer are interested in my view, and you found your own way of finding what you're looking for in price action. And there it is. And I hope that you share that with me. Not what you're doing specifically. I could care less, because I already know it's a derivative of what I've taught you. But your independence is what you're seeking, not the codependence. And what I was framing in the first quarter of my career was every time I would find a new author or a teacher or pseudo trader, I would initially like what they were teaching because I could see it in charts. But then when I tried to use it, it wouldn't work. So I would alienate them. I would say, hey, look, I'm not following that guy. He's a bum. He doesn't know what he's doing, blah, blah, blah. And I would spend time on America Online trashing them, because what I was trying to do was cut myself off emotionally and psychologically to the connection I created with high expectations that it should always work then. It's unrealistic. But that's exactly what I was thinking, that these guys that write these books, they don't get it wrong, because that's why they wrote a book, to prove that they know everything. And it sounds stupid. It really is stupid when you look back on it. But I'm being honest and telling you that's the level of expectation I had, because hey, look, some of these books cost me $50-$60, and I wasn't making a lot of money back then. And Street Smarts, it was $175 when I first purchased it. But I had been trading. I made some money, and it wasn't a big deal. But when I first started, I was buying everything I could afford and just foolishly chasing all these stupid titles. And I could not find traction with one person, one author. I kept going back to Larry Williams, but I have a love and hate relationship with him too, because sometimes his stuff would just go into a tailspin and just wouldn't deliver. And I noticed that in my own trading, in my own results, this is the benefit of keeping journals, there were times of the year where it was almost like clockwork that I would go into these ruts where I just couldn't get it to work. Maybe there's a lot to do with it because of psychology, internally, because it's the holidays and I'm distracted. But I do believe there's, and you're going to see this if you do the homework, there's a lot of data to support how periods of the year are just most likely not going to pan out like you want them to. All right, so what I'm saying to you in this video, and it's a long way around this, okay, I believe this right now. Just like I believed on Wednesday when I told you what I was expecting to happen, I believed that it was possible that we could see it. But I also gave you parameters and filters, so if Wednesday's lows on Euro were violated, or cable's low, okay, was violated, then it's probably wrong. And then if that's wrong and we're expecting something to unfold on a Friday with a large range, then what do you do? And that's kind of like what we're going to talk about. I just want you to know with objectivity, these are the things that I did and still do to combat the it just sucks to be wrong. Okay, I don't like doing it. I hate it. Okay, I absolutely hate it. So I'm being honest with you only because I want you all to know that I still am human and I feel these things, but I don't communicate that to you in the sense that I want you to complain about it too. Okay, when you get it wrong, don't vocalize it. I'm only doing it right now to show and share with you what I feel inside. Now, I don't take that and carry it over into my journal. I don't do those things because to do so fuels toxic thinking. It also memorializes the event as significant pain that you should expect every time you do a trade. And it doesn't sound well, it's not something you want to experience, but because you have labeled it and laced it in your journal with I hate this, I suck, or this, blah blah blah, and whatever vocabulary you use probably is going to be a lot more enhancers than I just used there. You don't want to do that in your journal, but I'm telling you that I still feel those things. Okay, I feel them. I feel them more in the last 3 years than I have in my entire career, only because my perception about price action, my opinion about price action is demanded on a week by week basis. And I have to always give my opinion, where prior to mentorship, I was comfortable with not needing an opinion for weeks and just not do anything. It's hard to be a mentor and say, okay, well, we're going to take a couple weeks off and there it is. But you all know this is coming. So right now, this is a period where I don't generally do anything until the first trading day of February. And it rattles some of you. I got a lot of people send me emails, and they're all new people. And if you go back and look at some of my old tutorials, okay, even back on baby pips, okay, I said these things back then. So it's not like I'm just looking for a vacation. I do this every year. My expectations drop precipitously the week that is ahead of Thanksgiving. And it stays that way all through January, because the beginning of the year, it's a slow start generally. And I don't want to be in there participating or developing a sentiment about the markets for the coming quarter in 2020 with the initial noise that's going to come, because there's going to be this lower volume in trading. And large fund volume, okay, it means the level of action that large funds will be putting into the marketplace are gradually introduced in the beginning of the year. They're not just thrown in there like a dart, let's see what I get, let's see how I can make money. They're slowly putting it to work, because it's something that is, you can see graphically if you go through the homework I'm going to outline at the end of the video. So anyway, I say all this stuff to just communicate and remind you that while you generally never hear me say, oh, this sucks, I hate this, blah, 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 I will tell you the things I don't like in certain price action, okay, but I try not to emotionalize them, okay, or elevate them to a measure of significance that creates some kind of toxic link to trading, because you can have 1,000 positive returns on your time invested in trading, and maybe even doing specific trades. And when you ever go to live trading on your own decision, you'll have a period of where you're making money, and it'll be a long series of wins. And then all of a sudden that inevitable loss, okay, will come. And something crazy happens. It's like you completely forget all of the continuity and consistency and just routine delivery of how price is shown, and you act on it, and you have win. And then again, that inevitable loss is going to come, and you can't avoid it. You cannot avoid it. It's going to come. But when it does, you have to keep your mind in check, because what's the first thing that's going to happen in your head? You're going to say, this sucks. You're probably going to cuss if you're a cursor. Okay. And you're probably going to feel a sense of revenge is in order. Okay. Or you're going to be looking to blame something other than yourself. You're going to blame the person you work with, the person you work for, who your relationship is with. If your children are around, they were the one that distracted you. I did all those things. Okay. It was always my oldest son crying at the time. He needed my attention. And I kept telling myself, I got to hold on to this trade. I got to watch it right here. And then I gave in. I go check on him because he's in his, his crib. He's wanting to get out and get picked up because he just woke up from his nap. And I'm still in a trade. And I probably sound like a terrible father. But hey, look, I'm real. These are all things that if every one of us were in a room, okay, you probably have a laundry list of things too that you probably aren't proud of, okay, but you're looking at the market and your attention is on these little bars going up and down because you know the potential, if you do this right, how it can change your life. And all these other things around you are distractions. Well, there are certain times of year and you don't want to view them as a distraction. And the holidays are that time for me. So I have to kind of like unplug and give myself permission to not be right. I don't need to be right. I don't need to be on. I don't have to have high level of accuracy, because I've seen over my studies that these times of the year, okay, we're getting ready to go into the last month or so of 2019. This is like this every single year. Sometimes you're going to see a lot of volatility. Most of the time you're not. And I don't care about the few times over the last 27 years I've seen it where it was volatile. Because prior to that, I was looking at data going back in the early 1900s. So I don't care about these once in a while one-hit wonders that occur. They're not predictable. Okay, what is predictable is low volume, low volatility, and just monotonous, just boring price action. Okay. Basically what you're seeing in the dollar index, because this is a lot of what I anticipate going forward. Just, it could go either way type thing. And I don't like those environments. Okay. I want to know what the probability is for a bullish move versus a bearish move. And it has to be so one-sided that, okay, I'll go in there and do that because I feel confident. And when you learn that, and what does that look like? Okay, we're going to talk about that Wednesday. If I could give you a snapshot, okay, of what it is that you're actually learning. Okay, because if I sat down with you at a restaurant, say you and I met for the first time, and we're sitting together, and we start talking. Hey, what do you do? Well, I trade foreign exchange. Well, what is that? If you're not familiar with investing or trading, you probably experienced this yourself. It's very hard to communicate what it is that you're doing. Okay, what do you mean you're trading forex, or what do you mean you're trading money? How's that work? It makes sense with stocks, and it's usually what I usually do. I say, look, it's basically just think of how it's done with stocks. Instead of a stock, I'm trading a country's currency versus the United States currency, and the disparity between those two is the opportunity. So, but your ability to do this as a career isn't going to happen overnight. And you're going to have periods where you cannot rely on even my concepts because they're not going to be as high probability because of the general nature of the environment that you're working in. Okay? So, I know I was all over the place with this, but I felt it necessary because I know what it was like when I was a new trader, a new student, new person that was just getting his feet wet in the marketplace, and I had terrible anxiety. I had debilitating anxiety where it was literally impossible for me to be around other people because I was ashamed of what I was unable to do, because in my mind and in my goals, and I had written out all these plans of what I was going to do and how I was going to get there, and I would start good. It would be really good. It would be consistent, but then that one loss would come, And then I second guessed everything. And then it went into this mindset that I'm going to get that back. And I personified the market as some villain. Okay. And it was me against him. It was Captain America versus, this evil market villain. And every time I had that mindset, it never panned out profitably. I ended up losing more money or blowing the account out. And this is the first quarter of my trading career where I was very much influenced by the aspects of emotional and psychological impacts of getting it wrong. When I was right, I would make money, and then it wouldn't be enough. I could make thousands of dollars per day back then when I was earning less than $500 gross a week for 13 hours a week. 13 hours a day working. I'm making thousands of dollars in a day. And every time I would get that, I'd be like, yeah, that feels good. Let me get another one. I needed another hit. Okay. I wanted to feel good. Kind of like what everybody does on social media. They want to post something so that way people can like it. But see, as many times they can see that little heart or likes behind their tweet, it makes them significant to themselves and to other people. They think this, okay? And that's the trap that social media provides us. You are not going to find that as a assistance or an aid in trading. You need to be indifferent to being right and wrong. As a new trader, especially if you're new here, this is not going to be the last time I outline something that doesn't pan out. It's going to happen. And I want you to be objective about it. That means take a step back. And if you just started this month, obviously, you don't have the time with us here to kind of weigh it against anything else except for your immediate exposure. So if you don't have it in your mindset, okay, if you just can't bring yourself to shake those thoughts that, oh, well, this doesn't work, or this isn't what I thought it was going to be like, just be reminded that there's a long history of archives that you can go through and see how this is really not the normal. And I want you to be aware of something, though, okay, because I mean this. If you do not feel confident that you're in the right place and that you're learning the real things that make these markets move, then you probably shouldn't be here. Okay, in other words, I don't want you to take this conversation I'm having with you right now as a please stay, please keep sending me money, I want you to stay. I don't want you to do that if you don't feel confident that what you're learning is in fact how markets actually trade and book. If they don't book the way I explain it, it'll be fairly obvious. Okay, the new folks that just stepped in, for November, this is the least of all the months for 2019 in terms of accuracy, performance. It's been a very difficult month personally. I can't make any excuses for it because it is what it is. I'm only operating in the rule base that I have and with the conditions the markets are providing me. And I have to do it regardless. I got to dance for you every single week. And there was many times in the last few months where I personally would have said, I'm not touching anything, I'm not doing anything. But I know what it feels like because I've been there myself when I feel a shred of doubt. I just completely cut it all off and chased and looked at something else. And I've had members do that. And these are members that were in the 2016, 2017 era. And they left. And they came back saying, hey, look, I made a mistake. It is what it is. Can I rejoin? Well, yeah, you can rejoin at month one, but you can't come back in where you stopped. And we've had a lot of members try to do that and get upset with me. But that's the rules. We don't let rejoins occur. So I want you to just think about what it is that brought you here. Okay? Because I'm probably not going to be your last mentor. You're going to look at other things, and that's good. Do that, because then you'll find the value of what you're learning here when you contrast what everybody else is trying to do. Everybody else is losing money too. Okay, so if I would have put money behind these ideas that I gave you in Wednesday, it wouldn't have panned out profitably. So there's nothing to be ashamed of in that regard. I'm not going to stand here and try to, sweet talk you into staying as a paying member. That's for you to decide. But I do want to provide a objective view, I guess, of what it is that we do here, how often we are accurate, and the very few times that we're not accurate. And it's very easy to place the most significance on your most recent transaction and forget all of the thousands of previous exposures where there was a positive return. As a new developing student in this industry, whether it be trading stocks or futures, anything, if you're speculating on the basis of eventually profiting or losing, not that we do that here because we're working in a scope of price action study and in demo, whatever. But you all know why you joined. Okay, you joined because you want to learn a skill set that if you feel confident and it has a delivered return of, I guess, prognostication. If you think certain things are going to lead to a price move, you and I both know what that means for you. At some point in time, you're going to make the leap on your own decision to do it with live funds. And that's going to be a scary thing. You're going to be very scared, even if it's a very low leverage, because you're going to forget all of the things that you put yourself through while learning this. And it's going to be very impactful for those individuals that do all the work, the boring stuff, the annotations and the studying. The folks that just watch videos and they think they understand it and they jump on the bike and they try to pedal, they run off and hit a curb and there it is, they're done. They get a skinned up knee, maybe they skinned up their hands, they have some boo-boos, and they want to never get on the bike again. And they fault the bike, they fault the opportunity, and not themselves for being premature or overly aggressive about trying to do more than they really should try to do. Okay, so the perception and perspective needs to be realigned, okay, in instances like we just experienced here for basically the whole entire month of November. Now, as a person that has a very competitive nature within me, as a person that went through martial arts all my life, I am very competitive, and I'm very competitive with myself. So I want you to know that even though I don't vocalize it and I don't really share it openly, I wanted to communicate it this way because many times I'm viewed as numb, like I don't experience any kind of emotions or psychological effect of getting something wrong. Okay, so when I get it wrong, what do? Well, I go back and look at all of the things that I've done in my journals, okay, in weeks before, months before, and just gloss over them, read them. And what it does is it reminds me, yes, this is a temporary little blip on a long, long career. If you make a mountain out of your errors, okay, you're going to build the very barrier to your success, because you're going to spend more time obsessing over what you did wrong, what I said wrong, what I did wrong, what I pointed to, what I talked about. You're going to think I didn't say something enough, or I hid something from you. All these things, you're going to have all these thoughts swirling through your head, okay? And that's normal. I want you to know that that's a normal feeling. I experienced that myself. And like I said, I went through books and courses and everything else. And I'm going to tell you this, and I mean this wholeheartedly. And if you don't believe me, go right ahead and spend money and do the same thing that I did. And you're going to waste time and you're going to waste money. But don't believe me, go do those things and then you'll feel better about it, knowing for a fact that you wasted your time and your money. Okay? But just know that I did all those same things. And it didn't help me. It just created a distraction from me being the problem. Okay? So what do I mean by that? you have to have a rule-based process. And whether it delivers 100% or not, you have to follow the rules. And if these rules over a period of time lead to a higher than 80% return, not in terms of percentage, but in terms of prognostication, your accuracy is above 80%. I believe that's personally achievable. But there's a lot of rules that you have to apply. And yes, you're going to be wrong because it's not 100%. But you have to have rule-based ideas. And so when I sit down with you all and I give you my analysis, I give you my perception on what I believe may happen, I'm not just picking things out of the air. I'm looking at things with a specific process that is not really made available to you yet. You're getting it in pieces. Okay, small little pieces over time, and you're seeing how I'm using these pieces over 2 times a week every month. I'm doing 8 videos with my opinion. Now, the benefit of having gone through these weeks and months with me initially won't be appreciated. And again, that's normal because you're inundated with 1,000 things to learn. You got all these videos coming at you. Plus, you got these 8 videos you got to listen to what's about to happen right now. And the worst thing you can do is ascribe all of the importance of being 100% accurate on the Wednesday and weekend reviews and equating that to success or graduation in the mentorship. Okay, because I already mentioned, and it's kind of like the theme here, the objectivity that you have to have as an analyst and a quote-unquote trader, it has to be indifferent but objective. So you can't take 2 days, Thursday and Friday, and throw out the entire year or years that you've watched things be outlined before it happens. Okay? The folks that do that, or if you know that that's your psychological makeup, I'm going to tell you this right now, and I mean this 100%. It took me years to fix myself with that. You're not going to pay 12 months and pay a chartered conversion fee and stay in that state. I already know it. I know it. But I want you to understand that while that choice is there, if you know that that's your psychological makeup, that you have to have it your way, it has to be 100%, perfect. Trading is not going to be for you at all. You will waffle and just flounder in everything that you get into. And you're always going to point the finger at the other people, because I did that too. I did that, and all it did was delayed my real progress. So I'll get off my soapbox. I've talked about it enough, but I want you to understand that there is a direct relationship between expectations and what you're going to really get, and then your response to those results. You should not get sugar highs when it's right, and you should not be destroyed or discouraged when things don't pan out on a very short-term basis, because that is exactly what your lifestyle is going to be the rest of your life. That's what this is. That's what, whether you realize it or not, that's what you subscribe to if you became a trader. It's not the same as I have a job and I'm paid salary. If I don't go to work, I get paid anyway. That's not what this is, folks. Okay, some of you think that that's what this is going to be like, and it's not like that at all. This is much, much harder than you first thought it was going to be. But this is a whole lot easier than going to work for somebody else the rest of your life. And that in between those two statements, okay, it's very easy and it's polarizing. Some of you would say, well, you know what, this is harder than I thought. It sucks to work the rest of my life, but I'm just going to have to do what I got to do. And if that's what you think, don't let me stop you. It's not for everyone. It's not going to be for everyone. Not all of you are going to be able to do this, okay? Because not because it can't work or it doesn't work. It just means that there's a whole lot of emphasis that's going to be placed on you, not me, not my concepts, not the market, you. Because you can't lose money unless you get into a trade. And how you got into that trade was all on you. 100% your responsibility. And can you take that level of responsibility when you're wrong? 99% of you aren't, because it has to be trained and you have to be exposed to it over time, which is why trading has to be done through a mentor. You have to. It doesn't have to be me. There could be other systems out there that are profitable, but you have to be with someone routinely and see how they encounter drawdown, how they encounter periods of the marketplace when it doesn't pan out in their favor, and how they handle their successful runs. You need to have that full spectrum to get a real education. But that's just an education in terms of exposure. That is not personal development. All you're doing is getting familiar with the idea, because you're seeing and hearing from my side of it, my perception of price, my opinion about what may happen based on my own experiences and length of time doing it. You will have to go through this whole process yourself when you completely let go of my hand and do all these things on your own. And it's going to be scary, very scary. And you may have anxiety about it. And if you don't think you will, trust me, you will. Regardless of how small that account size is when you first start or how little the leverage is. Because that reaction to being right and wrong, both hold with it a chemical reaction in your body. If it's good, you're going to elevate it to better than it should be. And when it's bad, you're going to monumentally elevate it up to it's the worst thing that's ever happened to you in life. It's the worst thing that could ever happen to you. It sounds silly. And when you look back on it and you read your journal, you're going to see that you've been there before. And while it was not pleasurable at the time, and while it was not fun, okay, and you feel like you wasted time, you wasted money, you didn't get a reaction that you were expecting. That reaction that you got in terms of experiencing that wrong decision or that inaccurate analysis or expecting something to pan out that didn't, it went the other direction. That exposure to that is a growing pain that is required, and you need a lot of them over time. Not a lot of them at one time, but over time you will see, it's not fun to have these periods, but they're so infrequent. I can look back at all my time, and yes, I can see that the ICT concepts work, the methods work. They're not 100%, but look how often they are versus the few times that they're not. That's how you develop. That's how you hold fast to this whole adventure. Okay? You're not going to be perfect. I am not perfect. Okay? If you hold a gun to my head and ask me every single day what I think a market or markets are going to do every single day, and invariably I'm going to be wrong. And some of you elevated me, just like you've elevated your expectations of how you're going to do, to a level of unreasonable. Okay, it's too high. I can't meet that expectation. If I felt that I could do that, I wouldn't have times of the year where I took off. Think about it. I've told you that before I even really got my, real run in terms of Forex education, mentoring it when I was on Baby Pips. But I warned everybody back then that there's times that you want to dial back, okay? And there may be other periods in your own development throughout the year. You'll say, okay, maybe it's something that's deeply rooted to a loss. Maybe someone passed away, or maybe it was a previous relationship and you are divorced and it hurts still. And it just makes you think of that negative thing. And if it's too distracting, then take that time off. That way you're giving yourself advantages to not going into those negative periods. But if you know there's a likelihood of a negative period in time of the year where you know that everything is not at its peak level of opportunity and odds in your favor, then you have to dial back something. You either have to dial back your frequency, dial back your leverage, or dial back your participation entirely. Okay, so I think I've made my point. And if it doesn't feel like it's applied to you, then thanks for listening through it. But nonetheless, you'll want to remember this video, because there's going to be a time where you go into the marketplace and you expect certain things to happen and they don't happen. And you have to have a way of thinking about it and be grounded and not point the finger at everyone else and prolong the development cycle that you're going through. And it builds responsibility, because each of us have to be responsible for our own actions, our own thoughts and decisions, because no one's putting you in those trades but you. No one's collapsing those trades prematurely but you. No one's feeling the emotions but you. So you have to wrestle with these things. Now, you can look at them as demons. Oh, these things they're attacking me. I got to deal with these. I got to wrestle with my demons. Or you could look at them as just another rung on the ladder that you got to reach up for. That rung is sitting there. Unless you reach up for it, you're not going to get any higher. But there's a process there. Every one specific element that is in that long process doesn't make the process in its entirety. It's just one piece of it. So when we're right, it's fun. We don't want to make it too big of a deal, because what it does is it creates the expectation of, okay, this feels good. I want to feel good again. That's why we don't high five. Yeah, woohoo. We don't do that. Okay. If we are having a period where it's not where we want it to be, it's not optimal, it's not a response we are expecting, we don't create some measure of emotional describing, hey, look, this is bad, this is terrible. It's basically, we go right back to the facts. Okay, we go into the price and say, okay, this is what took place, this is what I was expecting, and this is what happened. So what can I take away from this? Because that's experience, that's useful experience. And you're going to really be surprised how much you learn from the very things that you're trying to hide from. Okay, the moments where you get it wrong, the first impulse is, I want to block that out, or I want to get back in and win it back and more. Because if I do that, then I don't have to be afraid anymore. Well, no, it doesn't work like that. Because what will happen is you're going to go in there emotionally with a sense of revenge, not because there was a sound reason to do it, but only because you were emotionally pissed off and you want to go in there and make your money back. You got to get that back. You were victimized. You deserve retribution. You need to settle the score. No, you don't. You need to sit still. Sit still for a minute and figure out what it is that you did wrong. Maybe there's a reason to go in the other direction, not force your will in the marketplace and say, well, I know it's going to do this, so therefore I'm going to go back in, I'm going to do more leverage, because then I only need a little bit of the move that I would normally expect to see happen, and then I could destroy it, and I can beat my chest and stomp all around my house and see how smart I am. I'm remembering myself doing all these things. I've done all that stuff before. So just know that we have to have a balance, okay? And you're going to create a long career of decisions. All of those decisions are not going to be good ones. You have to own them. And you can't be so quick to say it's somebody else's fault, or I wish it would have done this, or I wish it would have done that, because all of those things are wasted time and energy. So you got to keep yourself focused on what you're doing. Remind yourself how it feels when you go through a series of when it's good. Because if you know and you can concede that we're going to be wrong sometimes, okay? We are, I am, you are, collectively, we're going to be wrong. Independently, you're going to be wrong. And you have to be in a mindset that allows and gives yourself permission to say, okay, I'm not perfect, but I'm not going to add more money to this environment or this negative period and make it bigger than it really is. Because none of you, if we were all trading with live funds, okay, say we're all trading live funds and we were looking for specific things this past week, none of you should have really felt any pain except for the ego aspect of being right or wrong. But if you were trading with live funds and you took a loss, that loss should not be debilitating. It should not be a career breaker. If it would have been, then your expectations are way too high. Your over leveraging mindset is going to bury you before you get a real chance. Okay. And believe me, there are periods in the year where it's just like real easy. It's just, we can see it coming. It's there. It's one-sided and it's not difficult at all. Right now, when we see the price action here, I mean, there's both sides of the equation could be argued with my own concepts. Now I'll say that again. Okay. I was really contemplating making a video, okay, where I outline both sides using my concepts. And if I would have put a video out and sent a link to, I don't know, I guess, like if I had the time to figure out how I could divide the entire mentorship group and gave half the group one video, okay, and the other half the other video. Now, obviously, I don't do that. I don't have the time to do that, and I wouldn't even consider doing it. Okay, you're all hearing the same thing. Nobody in here got a video where I said it was going to go up. Okay, that didn't happen. Everybody knows that I was expecting Thursday to see the dollar index roll lower and make an attempt to go into sell side liquidity. Okay, so I already know there's one guy here probably thinking that's what he's doing. It's not what I'm doing, man. So if I'm right, I'm right. If I'm wrong, I'm wrong. You know, I ain't got no problem explaining myself, okay, and how to keep yourself from getting, nuts about it. Because I did all these things when I was younger. But because I could see both sides of the spectrum in terms of being a bull or a bear, even with my own concepts, okay, because I got a question saying, I know a lot. I know how to read price. I know all these things, and even things I haven't taught yet. I should know better than to have a week like we just had. And that's not fair, number one, because there's a huge element to all of this, and it is I'm human. I am human. I'm a person that feels fear, regret, anxiety, performance anxiety, things like excitement, depression, sadness. These are all things that I go through just like you do. Okay, not because of the markets, but because of various things in my life. So they all are going to have some impact on me. And while I may not feel exactly what they are and how they're impacting me at the time of my decision making, not all the time is it obvious, even in hindsight, until weeks or months or years later. I say, oh yeah, I can see what that was probably a real thing going on. And again, that's one of the things I like looking at in my journal, where I had periods of just not delivering the optimal results that I look for. And I go in and I study what it is that was on my mind, which is mostly what my journals really are. Very little is in the form of technical stuff, because it's pretty simple stuff. I'm looking to annotate, and I'm looking for certain things to happen, and it is there or it isn't there. But really and this is why I don't share my journals with anyone really, is I share my concerns, okay, or my aspirations or my excitement about certain things that are intimate in my relationship, things that I'm doing, in another project. I may be investing in something that may have my concern. Maybe I suffered a loss in another thing. Okay, maybe I started a venture with someone else, and that doesn't pan out, or it's not panning out, or I feel like I made a bad decision with this. These are all things that I'm putting in my journal. Okay, I could have easily 6 or 7 different journals, but I just don't have the time to manage all that stuff. So my journal is this, and then I have a dream journal, which is entirely of dreams, but that's neither here nor there. Nonetheless, when we look at periods like this, you really want to arrest your subconscious. And the way you do that is you have to immediately feed it the right perspective, because it's only going to do what it's been trained to do, which is every other time you had something bad happen, that's pain, that's regret. And your brain will draw a parallel to the thing that caused it, not the conditions that caused it, the thing. So what's happening here? Your brain's going to draw a parallel to trading, foreign exchange, in a certain time frame is the enemy. Not, it didn't pan out because it was wrong. Don't make a big deal out of it. Go to the next setup. See the difference there? You didn't personify it. You didn't elevate it to wickedness, a villain that's trying to eat you alive. Okay? It's a transaction like any other transaction. How many times have you went to the store, bought something you really thought was going to fit, got home, put it on, or usually men, they buy something and once it gets washed, it's doesn't fit like it used to, or like it did when you tried it on. I don't like to go in stores to get clothes tried on and like that. I hate that. So when I buy clothes, I do it in a huge, like if I see a shirt that I like, I'll buy every color in that size. That way I ain't got to worry about it. And then I literally go in and I grab the shirt with the light off in my closet. And I know where I'm at. I'm that obsessive about it. So I just grab a shirt in that color, then I work from that. So I have to find pants that match, and there it is. Because otherwise I would sit in that closet and obsess about what I should wear. It's nuts. That's how nuts it is. Now, I could be consumed with those types of problems, okay, with trading, if I allowed myself to do that. But I don't do that because there's times of the year where I don't want to be in a situation where I know it's going to be unfavorable for me. So again, you may not want to stop. You may want to continue throughout the rest of the year. If that's the case, I want you to lower your leverage and lower your frequency of how many times you're taking an opportunity inside of the week. Trust me, if you do this, you will thank me for it. But I believe that you're going to learn the hard way, like I did. Everyone's going to have to learn it the hard way. I haven't had one student that said, I listened to everything you said and I never broke the rules, and because everybody does it. We're human. We are human. So don't beat yourself up. Okay, you're going to have it wrong. I'm going to do it wrong again. It's going to happen. But I want you to weigh it on balance. How many times do you see these things pan out versus when we don't see it pan out? And like I said, most new traders, most new students are only going to care about the most recent transaction, and they have too short of a time horizon, and they're myopic in their perception of what it is they're doing, not just in trading, not with working under me, with everything. And I can't fix that. No one was able to fix that for me. It took me 6 years to crack all that. Okay? So I know that if you have that mindset, you are going to struggle. You're not going to do well here. So you have to submit. If you can't submit, then you got to go, because you're going to waste your time and you're going to waste your money. And at the end of it, you're going to be on Forex Peace Army like the rest of these goobers, writing up reports and reviews about things that have absolutely no bearing on what I'm teaching. And you're going to have a toxic exposure to yourself, not me, yourself, because I can be wrong and still come out ahead. That's the benefit of this. And you have to be able to see that in your own independent study, where you can be wrong and still come out ahead, because that's trading. Again, it's not the equation of I'm giving you time for money, like if you were working for me. Okay, if I was your employer and I paid you a salary, you don't work for hourly pay, you get paid for the weekly pay. And it may require more hours or less hours than a standard 40-hour work week. Trading's not like that. There's a lot of uncertainty. There's a lot of waiting before the thing happens, before you would get paid. And once you get in, you start seeing funds building up in terms of paper profit, unrealized gain. Because even if you're trading with a live account, here's the thing that people don't get. Okay, everybody talks about, oh, you're just demo. If you're trading live funds and you're in a trade and you see the money going up in your account, it's a live account. But that's an unrealized gain. That's a paper trade. That's a demo trade. Okay, that money, you can't spend that money until you take it out. So why are these people on the sidelines outside this mentorship saying all these things about demo, when unless that money is taken out and realized and taxed, it's all demo. It's not real until you have it in your hands. It's not your money until you have it in your hands. These transactions, time for money, that has been trained from when we're younger, going through school, when he teaches to be good slaves, that transaction for money and time is not the same in trading. You have to work a lot to do very little to make what you're trying to make. You got to turn everything upside down. And it's hard, because there's going to be times where you're going to be like, screw this. I'm just going to go back to working. I can't deal with this. And I'm telling you when this is going to happen. You're going to have a period of win, loss, win, loss, win, loss. And it's going to be like, what's going on? And you're going to be so frustrated that you're going to be like, I'm just going to put a trade on because I can't stand how I feel. I need to be distracted. And you're going to try to do that around the holidays. Holidays are very stressful, because in your mind, your family and your friends and children, their expectations of you are high, but they're not as high as you have them in your head. I got to spend $15,000 on Christmas. That's how I felt when I was in my 20s. I didn't need to do that, but in my mind, I said I had to. Again, all these what if things, most of the what if thinking is toxic. And you need to live in the moment and take everything as an experience. And if you vilify every time that we do things in the marketplace, independently or collectively, and you translate that to, okay, this is a bad thing, this is a great thing, it's experience. That's all it is. You going into the marketplace looking for opportunity when the markets are really predisposed to move in one direction over the other is your primary goal. Knowing what that looks like is the mentorship. Knowing when it doesn't look like that is the mentorship. And if you didn't catch what I just said, rewind that and listen to it again. I'm teaching you the distinctions between how the market should look when you engage and what it will look like when you shouldn't. Now, there's going to be times where it could be either or, which is where we're at right now. And like I said a couple weeks ago, I normally wouldn't care. I wouldn't worry about it. I wouldn't be concerning myself with it. I wouldn't be doing anything at all, really. But because my time is demanded of me, and my opinion is demanded of me because I'm in contractual obligation with you, that I have to sit down with you every single week, 2 times a week, and tell you what I believe. Now, my opinion and my belief about what the market's going to do doesn't mean I'm putting a trade on with my live money. I'm not saying that I'm putting live funds on these trades. I'm giving you my analysis. So, I am telling you unequivocally that I am not putting any live funds to work for the rest of 2019. It's not happening. So if I'm telling you that, I really, really, really want you to understand that if I tell you something that's going to happen in the marketplace, don't take your personal life pressures and stress and moments of elation and feeling high on your horse when you're having a good period where everything's panning out. Don't take what I'm about to say over the next coming weeks as the gospel and price is going to absolutely do it, because I am already telling you in advance that these are my lowest periods of accuracy, consistency. It's just, that's just what I have come to learn in my own personal reflections. I've seen it. I know it's not likely to occur, and I have respected it. There's times where I wish I wouldn't have done that because I missed some really good moves. And it might happen. There might be some big moves that take place because of the Brexit stuff. I've already washed my hands of that. I'm not going to know everything about it. And believe me, the first couple of weeks when all this Brexit stuff was going on, I was getting really emotional about it because I'm like, this is new to me and I don't know what to expect. And I've not had that problem for years. Uncertainty. I've been comfortable with uncertainty, but not to that degree. You don't know what's going to happen. Somebody says we're going to have a vote. Somebody's going to let this one pass. We got a new prime minister. This prime minister is not going to get liked by the parliament, or this, that, whatever it is. Okay, it's a lot. It's a lot of things to weigh out. And normally I don't care about news, but this is something altogether different. It's not the same as a market report that comes out and they use it as smokescreen. This is completely new level stuff for me in terms of how am I, gauging what price should do. And it's very hard, very, very hard. I mean, this, I can be very honest with you and tell you in terms of analysis and deciding what I should be doing. This year has absolutely been the hardest of my entire career. And I know I said this the last 2 videos, and I'm really beating it, but it's not a dead horse. I'm beating it into your head because there's a lot of you that will hear me say that and say, oh, see, his methods are not working now. Because I'm seeing my methods work in other markets and other pairs and other things. Aussie dollar's been doing things, okay? And I know I say this now, and you're like, well, why do you talk about Aussie dollar? Because I'm teaching you how to stick to your processes using Euro dollar and GBP. Because if you can still survive and stay solvent in these conditions, then you're prepared for everything. Think about it. That's really the benefit. That's the takeaway from this. I'm mentoring you how to have longevity. Because I can teach you how to be profitable. That's easy. That's month 1. But how are you going to screw it up? All that stuff's coming by way of commentary. And that's, most of you probably already zoned out. Or tried to fast forward so you can see the charts different. Yeah, you are. These are the lessons that you need to know. If you don't know these lessons, you're going to blow your account. You're going to leave trading because you have self-destructed. And it's avoidable. But it takes a lot of discipline and a lot of patience. Much more patience than it's taking for you to get through this video. My oldest son, Cody, he's recently had a desire to get into this. And I'm elated over it. But he has now also said, Dad, I'm having a hard time with what you explained to me. I'm seeing it on both sides. And I said, I'm so proud that you can see that. Because if you can see that both sides of the equation could be argued about, it's a buy or it's a sell, and I'm referring specifically to this dollar chart. That's the daily chart. It has not moved. The chart has not, stayed static and we're looking at something else because other people have done this in the past. The chart is still the dollar index daily chart. I'm just on a rant. My son said, he goes, Dad, I can see how it could be argued both sides. So how do I trade that way? And my immediate response again was to be happy that he could identify with that. Because some of you may only see one side or the other. Some of you probably even said when I was doing the Wednesday video that this is a fair value gap, and when it goes down in here, I'm going to look at that as a long dollar and I'm going to short foreign currency, and you probably outperformed me. And that's awesome. That's awesome. I have no shame in that. Man, that's exactly what I want. I want all of you to do better than me in life, in how well you do your trades. I want all of that. I really, really, really want it for my children though. And when my oldest son says to me that he can see both sides, okay, some of you will only be able to see the side I'm pointing to. But my oldest son said that he could see both sides being argued. And that is a huge milestone, because if you can see those times in the marketplace when it's like that, you have unlocked the very thing that causes your demise. Because every time in the past I've ever traded the bond market or the S&P, when I was trading back then, the futures markets, the environment like we're having here, not so much to this degree, but whenever the market conditions could be argued both bullish or bearish immediately right now what to trade, when it was like that, I forced my opinion on it. And then when it didn't pan out, I went in again, and I went in again, increasing leverage, and no stop losses. And I turned what would otherwise be a normal low threshold hit, 1.5%, hit against my account, became like 12% in one day. One day, 20% loss. One day. Because I would lose my mind over the fact that I did it wrong, so I'm going to get them back. I'm going to get them back. In an environment that was really 50-50. Which is the reason why I take folks back to month one. Because month one's content is the foundation of what you would really make as your goal through mentorship. You want to really narrow down those types of conditions. When it's so one-sided, it's going to go one direction. It's going to go to a logical level of liquidity. Everything I've outlined in this chart is what I've tried to communicate in month one. These equal highs. See how we're going back to the chart now? Patience. These equal highs here. We had this one run here, another run here, another run here. So this is a lot of attempts to get up to and above 99. And we got there briefly a few times. But we gave up a lot of ground here. And then we went back below this old high. We're still below it. That's what this line here is. Okay. We just briefly went above it, just a little bit in here, and then we retraced. I am not convinced. I'm not convinced that we're going to go higher. If you look at the seasonal tendency for the dollar index and you're in month 5, look at the dollar index seasonal tendency from November into the end of December. Okay. This whole business where we have a high here and we have a high that's formed on Friday, it kind of resembles the very thing that you see in that seasonal tendency. So when I'm thinking about what I'm trusting, when I talk to each of you on Wednesdays and on the weekends, I know these things by heart. I know the seasonal tendencies. I know the things that I'm looking for. I know the roadmap of what should take place. And I see the fact that we had all these multiple attempts to go higher. And then we have these clear, obvious equal lows. And we have all these untapped liquidity here and these relative equal lows down here. We had many attempts to try to get up here, and it can't hold its ground. And then on Friday, we had this big run up that just happens to be against what I thought. I'm telling you from my own personal experience, I would have abandoned this idea of all this over here on this one single daily event in the past. When I was first starting out, I would completely throw the baby out with the baby, with the bathwater, and just completely say, okay, I'm going to go the other direction and be long. When everything in the chart, like it's telling me right now, says that this thing is not likely to go higher. Now, some of you that are very cynical in here would say, okay, you're wrestling with it and you can't admit when you're wrong. I'm arguing that the things I see in price action here negate any, like, I don't care really personally, because I'm not going to trade live funds the rest of the year. I'm not concerned if I'm wrong, because I'm sticking to the process that I know has served me well over 27 years. If you give me all these things that, okay, this is the fair value gap, this is the bullish order block, and therefore it has to go higher, you just got two things. I have all of this on my side saying it's going to go lower because it had multiple times to go up there, and then we have these clear equal lows, and this is one single daily event, and it went up to an area of imbalance, which it couldn't breach these highs. Why didn't it go above those highs? That's what I'm waiting to see on Sunday and Monday. Now, if we get above here into this fair value gap, I have to concede I'm absolutely wrong, and the dollar has shown the willingness to want to continue higher. And then the weekly chart, the volume imbalance will take us up into 99.98, which is basically 100. Okay, so we'll get a full dollar. But I am not thinking that until we get through here. I am comfortable with the idea of seeing what we have right now in price. And this is just one more attempt to go up right before it drops. I could be wrong again, and it's okay. I don't have any skin in the race. I am teaching you to stick to the rules. Now, if this pans out, great. I'm going to admittedly be feeling good, and I'll peacock around the house with my wife, say ha 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 ha, and she'll roll her eyes and say whatever. It's a video game still. If I'm wrong, I'm still okay with it because I'm sticking to the process and I'm not changing things around. I'm not picking and cherry picking when I want to follow the method. See, that's the problem. Your tendencies to not want to follow the rules is going to fade in and out. Okay, especially if you break the rules a little bit and it pays you out in a positive reward. Because then it's like, okay, well, I know I can break the rules sometimes. And then you feel like you got a niche or a gut feeling about it. And you start paying less attention to following the rules. And all of a sudden, you're going to realize you're not actually trading on any rules anymore. You're trading on a whim. You're trading on an impulse, which is what retail traders do. So, again, I dressed this chart up to really communicate. And also, I spent a lot of time. And how much time we've been talking here already? An hour and 24 minutes. It's going to be a long video. An hour and 24 minutes. I've been beating it in your head, the psychological barriers, okay, and also trying to draw some pathways through all of this, because you're going to feel some emotional struggle. You're going to feel some psychological barriers, okay, that you're going to have to break through them. I can talk about it, I can cheerlead, I can say this is normal, but ultimately you got to roll your sleeves up. You have to grind through it, and then you also have to be able to reflect on your previous experiences to kind of like remind you that, yeah, this is such a small little thing. It's a small little blip on your radar, okay? That doesn't really mean that there's an adversary in front of you, okay? It's a normal instance. If these things happen, they're going to happen again. You're going to get it wrong. I'm going to get it wrong. And it doesn't mean it's the end of your career. It will be if you let it. You can lose your mind, go in there and try to get revenge, try to over leverage, try to get it back right away. These are all things that retail traders and people like myself, when I first started, did and blew accounts. Not blowing demo accounts. I was blowing doctor salaries. Okay? So I want you to understand that I know what it feels like to do these things, and it's not fun. And it certainly hurts financially when you're losing that kind of money. And you may not think that's going to happen to you because maybe it's unbelievable right now because you're just starting out. Some of you are questioning how much money you should have. I just got an email the other day from a guy. How much money should I put into a trading account? Whatever you can afford to lose and not worry about it. That's what you should start with. And regardless of what that amount is, that's what you start with. And if it's not a significant amount of money, create a 401k mindset with it, where each week you pay yourself a bill of this is what you're going to invest into it. So you're going to invest and trade it, and you build it up over time like that. So that's your answer, okay? But if you do have a significant amount of money, or if you go into fund management, you get yourself licensed and you go into that, if you do those things, you need to have a thought process that will get you through this, because it is very stressful when you're trading with other people's money. It feels amazing when you're making them money, and it's like financial crack. Okay. I mean, you get a high like you've never had before because you know what these people are thinking of you. And then all of a sudden you start believing all that, and then you take it to the next level, and then you get a loss. And all of a sudden it feels like your whole world is crumbling, because now you're afraid if you take another trade and it's a loss, what would they think of you? Well, it's all expectation. If you've created that measure of high, lofty expectation in yourself and in others about you, that means you have to live up to that every single time. And that's Olympic level type of performance. Nobody does those types of things for a long period of time. You can have short periods of, but you got to eventually, probabilities and statistics will become a factor. Not everything stays in, high probability. And we're moving into that now. So getting back to my son and how it relates to you as a student, because he could argue both sides of the equation on the dollar index, I said to him, when you see those types of things, what you have identified is a very low probability condition. That means either side could happen. So if it can be identified by you, and just like him, he doesn't have a lot of experience, okay, but he can see how the dollar index was both side could be argued. There's a fair value gap down here. If you remember what I said in the video, I think it was like the 9-minute mark or so, anywhere between 7 and 10-minute mark on the Wednesday video. I actually said that normally with this lower low than this low here, if we didn't have all these these exaggerated runs above into the 99 and rejected, I would have used this fair value gap as a catalyst to go long and expect dollar to rally higher. Now, it just so happens that the dollar did in fact go higher, but I also outlined why I believed it would go lower. Okay, so now think about really what I gave you last week. I gave you the real things that I have been wrestling with in terms of my analysis for the dollar index. I gave you the very thing that would normally be the buy side that I would focus on, what would constitute me trusting that analysis, versus what I gave you on Wednesday, why I believe it's most likely to go lower. None of it has changed. Even though we went above here, and I think if I'm not mistaken, I said if we get above this fair value gap in here, okay, and we got up here, then I'm probably wrong about the sell side liquidity pool. Okay, yeah. But I also said that that's not likely to happen this past week. I still believe this is going to happen. These equal lows are going to get taken. What completely removes that, okay, on the near term, and I'm talking like for the next couple months, is we get above this one here. If we get above here, I'm absolutely dead wrong. There's no ifs, ands, or buts about it. I'm absolutely wrong that this is going to be the case, and we could probably see, a much higher dollar. It could be 102s, 104s over time before we get these taken out. And again, that's assuming we get above this fair value gap. But until that case is seen and proven in price, I believe that this right here was just a retracement, and then we'll probably see it go lower because of all the factors I've outlined here that's shaded. Okay, so I appreciate your patience getting through that. We'll actually go down to the hourly chart now. Imagine that. 1 hour and 45 minutes, and we finally got down to another time frame. All right, let's fix this chart here. All right, so here's the hourly chart, and this is that fair value gap. And on Thursday, we saw these relative equal lows. I mentioned that if you looked at the lows here, they looked really nice, like for a trend line. I expected that to be broken, and I drew your attention down to these equal lows. Even though it was a small short-term draw on liquidity, it was the draw on liquidity I was aiming for. It went down to it completely, taking those out, and then rejected there. Okay, so when price traded back up into the fair value gap, warning sign right away. Then we also saw that the euro dollar and cable were actually showing underlying weakness as well. Even though that cable performed as I was expecting it to, it didn't go to the liquidity pool as I'll outline when we go into the 15-minute time frame for GBP USD. But ultimately, we had a fair value gap in the lower time frame, which is what you'll see here when this bullish order block here, down close candle. We traded down on Friday to that level, optimal trade entry as well, and then expansion up through the fair value gap, and then rebalancing to a buy side liquidity pool that has not been annotated, but it's a SIBI that rebalanced here, and buy side liquidity taken. The next upside buy side liquidity pool is that equal high here, but it's that old high on the daily chart that I felt that was not likely to get rated, and that's what I'm electing to trust right now. It could trade right up in there, and I could be wrong, but I think we just went up to this point here, and then we'll see if it wants to go back below here and attack the sell side liquidity here, and on the lower time frame, I'm sorry, in the higher time frame, sell side liquidity pool on those equal lows on the daily US dollar index chart. On a 15-minute basis, and if we zoom in a little bit, here's that fair value gap, bullish order block, breaker, we hit it, then we routed away. When you start seeing discount arrays being supported and premium arrays be broken, then the internals have changed. And we had that here. Market comes back down, rebalances the fair value gap here. Market has an aggressive run higher. Breaker trades back down to the breaker and starts rallying. Fair value gap here and rallies. So every discount array is being respected. Okay. Fast forward that to Friday. What was the only trade I saw was GBP USD going short. And again, we'll talk about that when we get to it. But for now, let's go back out to a daily so I can transition to the euro dollar. All right, and just real quick, if we do get above here, again, this is the weekly volume imbalance. Let's go out to the weekly chart. That's this over here. So it's only one little wick in here, but there's no real body to the candles. So that's what I'm highlighting. Return back to this candle's close. That would be rebalancing of the volume imbalance for weekly dollar. And now let's go to euro dollar. So euro and forex.com. All right, and zoom in a little bit. And let's go one more time. All right, so we had here's our fair value gap here. I said I want to see it trade through that. We only came right up into it on Thursday and immediately had a reaction. We went below Wednesday's low. Go back and listen to Wednesday's video. Okay, I said that we have to see Wednesday's low defend price. Okay, it has to stay above it. And Wednesday's low was 110.53 and 1 pipette. Thursday, we went to 110.52 and 4 pipettes. So we broke it. So the next day, Friday, that's not bullish anymore. Go back and listen to what I said in the video. It's bullish as long as it doesn't do Wednesday's low and go below it. And it did. So there's your algorithm. It has to stay above that. If it doesn't, all bets are off, and the large range day that we were expecting for Friday is not likely to be an up candle. It's going to be a down candle. Okay. And I know some of you that are very, very cynical in here. You're going to say, oh, here we go, form fitting. No, this is what you're going to learn in 2022. More of this type of thing where there has to be certain if then statements. And if certain things occur, they're either going to confirm or negate an operation on your part that leads to a decision that leads to a trade. Okay, that was the whole reason why I gave those ideas. I didn't have to put them in Wednesday's video. What are the limiters on a setup being viable? You have to have them in your system, your method, okay, in your trading plan. If they're not there, you're not going to have a system with, longevity or profitability. It's going to be willy-nilly, it's hit and miss, and you're not going to have a measurable degree of consistency. It's going to be sporadic, and no one likes sporadic. Well, I don't like sporadic, let's say it that way. All right, so anyway, we have a small little imbalance here on this candle. It'll be interesting to see what we do on Sunday and Monday. Do we continuously break lower? If we do, then I'm wrong about this being the low of the year. But ultimately, we could still sweep below these equal lows, relative equal lows, get a little bit deeper into that, and then that could be a rejection as well. I'm not subscribing to selling short euro dollar yet unless the dollar does what I outlined relative to its daily chart in that higher premium fair value gap. It has to be above that. All right, so let's drop into a hourly chart. Let's move right along. All right, so here's Thursday's trading, and here's Wednesday. Wednesday's low, and we violated on Thursday. So we can't be a buyer of euro dollar on Friday. Bearish order block, trade up into this here. Judas swing. I didn't trust it. I elected to focus and follow GBP USD, and I felt that we could probably just stay stagnant on euro dollar. You can actually see that in my Twitter. I said that the range for euro dollar is just unbelievably small, and I didn't feel confident that we have this much of a protraction lower. Nonetheless, it did happen. And on the 15-minute time frame, zoom out. Okay. Small little fair value gap right in here. Right there. Oh, that's going to have to be close as I'm going to get it, otherwise it'll drive me crazy. Didn't get up into that. Bearish order block. Trades into it. So buy side liquidity. Small little fair value gap. Another fair value gap. And then we have the bearish order block. And then we have the buy side liquidity pool here. All of those premium arrays. We went right up to this high here. Rejected. This imbalance. SIBI gets rebalanced into here. Move lower, fair value gap, and then expands lower. At the same time this is occurring is when we saw that retracement back to the fair value gap on the dollar index that was bullish. And then you see all this basically intermarket relationship panning out. Go back to a daily and move over to the cable GBP. USD and Forex.com. All right, and we'll zoom in. All right, so we have buy side liquidity pool, still did not break into that. This moved lower. While I did not expect that, I was expecting to be this type of move on the upside. The catalyst was that dollar index changing gears on Thursday. All of this still in here. I just really want to bring this up again because it's important. All of this price action between this candle's high and this candle's low, all of this is very, very balanced. Okay, it's very balanced, and the only reason why we can go lower if it's still bullish is to take these relative equal lows out, because a lot of stops have been trailed up to this low. Okay, a lot of bull flag type traders have their stops resting below here. So this one particular currency, I think, is likely to break this low here and still remain bullish. It could still do an upside expansion and get into these equal highs by Christmas by running this low first. That's what I personally think is going to happen with cable. If we drop into a hourly chart, all right, so here's Wednesday's trading. I mentioned in Wednesday's video that I wanted to see Thursday's agent session create the low of the day, and then if it does have any kind of retracement It needs to be very, very shallow in London and then expand up and take the buy side liquidity that was resting here, which will be more apparent when we look at the 15-minute time frame. Because on Wednesday, I was the only pair that I went down to a 15-minute time frame on, and I said, you're probably asking yourself, why am I showing a 15-minute chart on this one, Michael, and not the other ones? Because I wanted to talk about these equal highs on the 15-minute time frame, because I thought that was going to be the draw on cable, and notice we didn't get there. So here's a premium array that could not get hit. Now think about what happens later. I mentioned that these lows here should stay intact. We don't want to see it trade below that. And here is the algorithmic things I gave you in the cable. I said I wanted to see Asia create the low of the day. I don't want to see any kind of real significant Judas swing lower in London for a move to go higher. I wanted to run straight from Asia all the way up in and take these buy side liquidity out. Then, had it done that, I would have expected a retracement in New York to send it higher, even still. Now let's look at what took place and how this is useful. We did get the continuation all the way up and a small little move lower in GBP. Price did not go to the liquidity pool here. It failed to get there. Then it topped out and broke down. In here becomes a breaker. Market trades back up to that on Friday. London session, bearish breaker. All the things I was looking for did not pan out. I wanted to see it run with no significant drop down in London. I wanted to see the low form in Asia. So the folks that are watching this, okay, are thinking, okay, this is wrong, this trade is wrong. It was all wrong, 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 wrong. No, I was giving you parameters. As long as these things panned out, then it's bullish and we would see this run out here. It offered pips. In fact, I even tweeted when it was trading at 129.70 to take your profits right now. Don't demand that you have to be right. Remove that. Market comes back down crashing, okay? Breaker. Comes back on to Friday. London session, bearish breaker. Why can we sell it here? Because we didn't see the run on liquidity. It should have very easily taken that. It didn't. So if price isn't going to reach for what would otherwise be a relatively easy objective, does that indicate bullishness? No. This breakdown in price here warrants a reversal of opinion. And then we have the relative equal lows over here, which is essentially 128.20. And we got down really close to it on this candle here. Went down to a low of 128.23 in 8 pipettes. So really close to it, but didn't do it. I suggest that it will probably do that on Sunday's opening. It'll probably gap down, run into this area here. And we'll see if it's going to make a deeper retracement on that daily chart. But I have not abandoned the bullishness on this pair. I think its tomfoolery is not completely exhausted for the year. But this pair was a really nice. It was, again, just like I was saying, that Friday I thought was going to be the big range day on this particular week. And again, it has to do with Wednesday. We had seen how Monday, Tuesday, and Wednesdays traded. It was very lethargic. It wasn't doing anything. It was consolidated across the dollar, the euro dollar, and cable. So the expansion move was going to be on Friday using the weekly templates that you learn about in the core content, weekly profiles. My direction was wrong, but the things I outlined that you should study and see and anticipate on Thursday didn't fully manifest. But even though it didn't, the run in here was offering up 40 pips or so. That is something that's a takeaway for the week. So if you're trying to set an objective as a new trader when you first start here, 25 to 30 pips is what you should be aiming for. You can do a whole lot. You can quit your job on that, but you have to have consistency and you have to be able to manage your money appropriately. Otherwise, it doesn't matter how many pips you make, you still won't be able to survive, and you'll be working the rest of your life or blow your account. The money management aspect is what's going to make or break you. Anyway, that's the breakdown on the pairs and what took place. I want you to go back and listen to the things I was anticipating for the cable and Eurodollar, and how those things resulted in the changing, because the guy tweeted this morning to me saying that telling us about the bias changing on the weekend essentially is like to no use. You should tell us in the middle of the week. No, you need to be in the charts studying the things I'm pointing to. And if those things don't pan out, it's telling you something. It's teaching you that this thing is not likely to do what I've outlined. So therefore, if it's not doing that, and we anticipate a large move on Friday, you got to be flexible and look for the opportunity on the downside. I elected to look at cable on Friday over Eurodollar. I felt it was more likely to occur on cable because of the things I've outlined on Thursday not panning out entirely as I was expecting, which is algorithmic. It needs to do this, 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 and this. And then if it does those things, it will give me a result that results in this high being taken out, and then looking for that daily buy-side liquidity pool on the equal highs on its daily chart. It only gave us the initial run here. And then it broke where I was telling live on Twitter, pay yourself. When it was trading at 70, pay yourself. Get out with something right now. Then it breaks down, breaking the underlying premise of what sets up the setup for the remainder of the week. It failed. It should have very easily taken this. It didn't. And it broke down internally on the intraday structure. While it didn't take these out here until Friday, the retracement back up into the breaker is sufficient enough because it had already changed gears and bullish on the dollar index, as I mentioned, a while ago in the video. All right. So what I want you to do for homework, I want you to take a daily chart. Okay. And I'm going to outline this in verbal instructions, and then you're going to do the best you can. And then I'll show you on Wednesday what it's communicating to you. I want you to take a daily chart and show one calendar year from January 1st to the last day of December. And then I want you to put a vertical line on every individual first trading day of every new month. So you're going to have all the months individually divided. Okay. And I want you to do this with any one currency. It doesn't have to be the euro. It doesn't have to be the cable. It can be any one currency. Then I want you to think about that full calendar year. Okay. And I want you to think about midnight New York time to noon New York time. Think about the things that you understand about intraday price action. And for some of you, it may not be a lot, and I understand that, but it's okay. But I want you to think about how we anticipate specific characteristics about price on an intraday chart. For instance, if you look at a intraday 60-minute chart, the things that we anticipate relative to time and price on a 1 hour chart, I want you to think about that with a full calendar spectrum of price from January to December, dividing each one of those calendar months up. Think about those individual months as a 1 hour interval on a 1 hour chart, with the reference point of midnight New York to noon New York. Okay. And I will give you some insights about that and what's useful about it and how we can use it going forward. And trust me, it's going to take your understanding of price action to a whole different level. But that's your homework. It's a very simple one, but all of you are going to have different graduated understandings and expectations about what it is I'm going to reveal to you because of where you're at in the mentorship. Okay. But again, all you're doing is contemplating and thinking about the things that we use for an hourly chart relative to midnight New York time to noon New York time, and putting those characteristics in the same scope as those individual months. Okay. So again, it may feel cryptic. It may feel like, I don't understand what you're asking. Don't force it. Don't push it. Watch and see what I do with it on Wednesday. Enjoy your weekend. Relax. We'll resume next week, like I said, but it's going to be a light week in terms of volume. A lot of money will be put on the sidelines from a dollar standpoint, which means that we could see some flexing on foreign currency because of the dollar-based pairs not having the level of volume it would normally have because of the holiday. And until I talk to you next week on Wednesday, I wish you good luck and good trading.